Priya, are we going to be able to deduce anything about demand from this 3-year auction, or do we have to wait for the 10s, etc.?
I think we really have to wait for the 10-year and the 30-year, so the next 2 days. Because if you look at this entire rate move over the last month, it was driven by the long end. Term premium, or essentially this long end of the curve, got sort of unhinged, I would argue. And the market, the way the market reacted to the Fed and the refunding in payrolls last week, told me that the market was extremely oversold. Now, is positioning cleaner after the move last week, or is there more short covering that has to happen? I think that's what we'll be looking at in the auctions. I'll be looking at the indirect participation. So I think the next 2 days, where with the long end, just statistics of demand, I think that's going to be important, because I would say this move higher and then lower was really a technical move over the last month. I think fundamentals matter, Fed policy and the data, but just this last move to 5% was technicals, and now we have to see if essentially positioning is cleaner.
So does that mean that you think the long end has peaked then, if this was a positioning move, or what?
I do think so. I mean, it's always hard to say what's the absolute peak in rates. But I think when we got to this almost flat yield curve around 5%, and the fact that it was driven by real rates, the fact that the equity market, started to sort of get spooked by it, all that was telling me that we were near peaking. The problem is when the shorts take hold and these technical levels, and we had to go back to 2007 to look at these technical levels, when they were breaking, it was hard to have a whole lot of conviction. The last week does give me some conviction that, we've peaked here. I think the question is, are we going to be in a 450 to 5% range, or are we actually going much lower in terms of that lower end of that range?
And what do you think the answer to that question is, Priya?
I think the data right now suggests that we're in a soft landing as we speak. But markets are forward-looking. We are supposed to be forward-looking. I think the economy is headed lower. I think we're going to head into a hard landing. These long and variable lags, we've all used that term. I think they're playing out now. But is that the next week, or is that the next 3 months? Our view is it's a little bit further out. So we think, that the economy is going to slow down and that 10 years is going to head closer to 4%. But that's probably a trade for the next 3 months, not right away.
So that's great. It's such a great point, because it's a question we've been asking all day. We were talking about the Goldilocks market earlier, and now it's like a goldfish market, right? Like the thing that you're looking at now is the thing that you don't look at later. Like it's flipping so quickly, and volatility can come so quickly, and it's kind of hard to know what to do with that. Are we in a goldfish market, Priya, in your world?
I like that term. I hadn't heard that before. I think it's a good term. The market's volatile because, as I said, it's technical driven. Conviction levels are low. The recession playbook has not worked all year. You look at how much the Fed did. The economy was supposed to be much weaker right now. It's not. So I think that's why when the market moves, the narrative shifts to fit that price action. But I think if you take a step back, we have to get used to the Fed not doing a whole lot. I think they've told us the bar to raise rates is high. I think the bar to cut rates is also very high. So forward guidance is essentially dead for global central banks. And we have to look at the data and then adjust market pricing. And the market, I would say, is priced for a soft landing. So I think as it becomes clear that the economy is showing more than what's priced, and I think then we can start to move. But I think we all have to take a deep breath, let the tightening play out in the economy, and not get too caught up by these 10, 15 basis point moves that we're getting on a daily basis, it seems.